Hi everyone, this is Dan with Theta Trend. Today is Tuesday, January 26, 2016. It's about 2:15 p.m. or so here, Mountain Time. The market's closed 15 minutes ago or so. We had a really big up day again today. So you can see here, we're looking at a chart of the Russell 2000, and the market was up about 20 points. I just want to point out here, the daily one-day standard deviation move for the market is about 16 and a half points. And basically what we're seeing is we're just sort of seeing the market fly up, fly down, fly back up. But we are back up against the upper part of our CIB, and as a result, we have the potential tomorrow to get up and above this level where an adjustment is necessary. If we just drop down to the 65-minute time frame, one of the things we saw is we saw the market come down here, sold off pretty sharply, firmed up towards the 5-day simple moving average. That's this yellow line here. And now it's sort of started to move sideways, but we can see the moving averages are starting to slope up a little bit. There's some stability coming into the market. And this isn't a reason to get long-term long or anything like that, but it's just a reason to recognize that the downtrend seems to have stalled at least or slowed, and there's the possibility, at any rate, that we could certainly move up to the higher end of this consolidation, or potentially higher. First we need to get back up and above this about, let's call it 1020-ish or so, something like that. If we can see the market get up above that, it has a shot at making it up here to 1035, I'd say. And if it can get up and through 1035, then we'll have to evaluate it, see where we are there. But that's sort of the initial level tomorrow. If we see the market get up and above that, then it has the potential to push up into here, up into the 1030s. If the market breaks down and heads lower, this 996-ish level is probably going to be pretty important. If we violate this, we're going to go ahead and make a lower low on the 65-minute time frame, and that's going to be an invitation back down to at least 985 and potentially lower to retest these lows. Again, we don't really know what's going to happen, but the only reason we're looking at this so closely is we're getting right up around our upside adjustment point, which is sort of in here at, we can just call it 1025 or so, something like that. But let's hop over and look at the position, and I'll show you what I'm thinking about if an adjustment does become necessary. So this is the March CIB. It's open right now. We have the 925, 980, 1035 butterfly, and we also have the 102 call. The trade has been adjusted once. We rolled it down, and we're still in the position. When we rolled it down, we locked in a loss of about $7. And I've created that $7 loss using these IWM calls here. So you can see I just showed it as buying it for 7 cents and then selling it out for 0. And so that's the loss on the roll. And so it's built into the P&L that we're seeing here right now. But as the position sits at the close today, we are right here, just under 101 in the IWM. Let's switch back over to RUT. I think about everything in terms of RUT. And when we close the day at about 1017 or so, up, I think 2%, right? 2.07%. And the position itself is down about $48, so nothing major. It's just, it's the nature of things. It sort of flops to and from profit at this point in the trade. And if we were to sell off, it would help the position. Yesterday, this position was up money. It was up about $30 or so. And today we got this move higher, 20 points. And what happens when we get this move higher is this upper long put here, this 1035, the IV tends to come out of it, and as a result it makes this T+0 line slump a little bit. So if we were to trade sharply lower again tomorrow, this position is probably pretty likely to show a profit again. So there's not much to be concerned about on the downside at this point in the trade, because we have a long way to go, and this upper long will help us if we get a little bit of a sell-off. So at any rate, if we get up to this kind of in the neighborhood of 1025 is the level that I'm watching. And if we look at the T+0 line, this tells us if we get there, we can expect a loss in the low 60s. That might be a little bit difficult to see on the screen. It says negative $62. We have an open loss of about $48 here at the 1017 level right now. And one of the things that we would do is we'd go ahead and add another butterfly, and we'd add another IWM call. So if we were to add on this 950, 1000, 1050 butterfly, and I'm just putting this on at current prices, obviously the market's going to trade up and the prices are going to change a little bit. But if we were to add just this one butterfly, what we'd see is the delta would go to -6 from negative 1.5. So basically flat delta to negative 6. It's a little bit short delta. And then what we could do is we could add in a call. So in terms of IWM, what we'd be looking to do is we'd be looking to pick up maybe, somewhere in the neighborhood of 40 deltas or so, IWM deltas, just to flatten out the T plus 0. So I put on the 99 call here, which we can see has a delta of 58 in IWM or 588 in the RUT. But if we go ahead and check that on, then we end up in a position that looks something like this. And so now, if that was to happen, we'd bring the delta down basically to flat, and we're going to be positive a little more theta because we have another butterfly on there, and we can just kind of discard the open P&L at that point because it's going to change. But at any rate, that's one option that we have. Another option that we have is to sell out the 102, which is what we're currently long. So we have the long 102 call here right now. If we sold out the 102, we could go down and buy the 97. And if we were to do that, we end up in a situation where we're a little bit shorter delta. So we have negative 4 RUT deltas here instead of the, essentially flat if we were to add an extra call. But in this case, we only have the one call and we're moving down into an in-the-money call. And there's something that's interesting to point out here as well. So if we come over here to the IWM options chain, I have a few different fields selected. So I have open interest, implied volatility, delta, extrinsic, and then the bid and the ask. But one of the things that's worth pointing out here is as we're just a little bit out of the money here, like say the 102 to 104, you can see that the extrinsic value is about $2, $2.55. When you're totally out of the money, the entire option is extrinsic, right? As you move closer to the money, that extrinsic value increases, okay? And as you move into the money, the extrinsic value actually decreases. So if we wait kind of until the market trades a little higher, this 102 call is going to have the highest amount of extrinsic value possible in some sense. And so if we are selling it out, we're going to sell it out and we're going to buy something that has a lower extrinsic value. Which is just, essentially what the potential for decay is. So that's just something that's worth pointing out. It's not super critical, but just something to be aware of. But the adjustment I think I'll probably be making if we get this move up higher tomorrow is actually instead of going with the 950, 1000, 1050, I'm going to drop down the lower leg another 5 points. So I'll have a 55 points wide on the downside, and then I'll have 50 on the upside. And so you can see what happens is we end up with a slightly flatter delta. So the position delta for this butterfly, the 950, is about negative 44 RUT deltas. And if we drop to the 945, we end up with negative 31. So all I'm doing is just trying to overcome a little bit of the short delta situation by taking on a little bit more risk here on the downside, and 5 points of risk there isn't a huge difference really. So if it was to do something like that and then add this vertical in, you end up in a situation here where the delta is negative 28. This is IWM, but if we go to RUT, we end up with negative 3 or so delta, and I feel good about that. I feel comfortable, and the next adjustment point puts us out here somewhere into like the 1035-ish area, and at that point we're looking at a potential open loss of maybe about $115 if it was all to happen exactly at this moment and we were to make this adjustment at this exact time. But at any rate, that's what I'm watching for tomorrow. There's the possibility to sell this or to buy this debit spread, the 97-102 call spread, and then I'm watching this 945, 1000, 1050 butterfly as the bigger part of the adjustment to the body of the butterfly. But we'll see how it all plays out. Again, the market is really moving here quite a bit. If we look at the futures, we did get a close up above the daily VWAP, and also this is the week-to-date VWAP. We're looking at the 65-minute chart. So we had this big sell-off overnight, and then from there it's just been a strong rally back up above the weekly volume-weighted average price. So I'm not sure. We're right up here into resistance. We'll have to wait and see what tomorrow holds. We have a plan if the market moves higher, if the market moves a little bit lower. we're not going to have to do anything for quite some time. But that's all I have for tonight. If you have any questions, feel free to send me an email, info@thetatrend.com. Thanks for watching.